since, we are at the end of 2018, what we're doing is we're recapping the year gone by through the sectors that have impacted the market and the economy. Today on our list is the power sector. Anisha is here with a look back at the power industry and all the challenges that it has faced over the last 1 year. Anisha, over to you.
Well, as the power sector powered ahead this year, it made a lot of headlines, albeit for both good as well as bad reasons. Now, the 100% electrification drove up the demand as well as the power rates in the country, and as a result, the plant utilizations went up. Separately, to address the power stress in the sector, a lot of policy initiatives were brought into effect. Now, let me break these down for you. First was a proud moment for the Prime Minister and the entire country as we achieved 100% electrification. Now, that is to say that all villages in the country have now the access to electricity. Now, while the access doesn't really mean that every villager is using electricity, at least the nation has been mapped with power, as you can see, and the chart should come up for you on the screen. Now, this 100% electrification not only led to increased spends on the last mile connectivity, but also drove up the demand for power. For the first time in over half a decade, the electricity demand scaled to double digits at 10%, raising hopes that FY19 as a whole could see a 7% demand growth when it comes to electricity. Now, experts say that the uptick in this power demand was led by both festive demand as well as a genuine uptick in the consumption by the industrial sector. As a result, the fall in PLFs have been arrested. As you can see, even if the PLFs have not moved up very high, at least it has been arrested. The fall that was there in the PLFs of late has been arrested, and that is the positive. And this is partly due to the increase in capacity and the use of power-saving lights like LED, etc. Moving on then, it is in fact, one of the biggest positives this year that the deficit as well has been narrowed in terms of the peak supply-demand deficit that we have been talking about of late. Let's move on and bring on the next chart on the screen in terms of what are the other positives in the year that we have seen in terms of the good news going by for the sector. There were a lot of policy initiatives that were brought on to this year. We had Samadhan, Parivartan as well as Shakti in order to reduce the coal shortage in the country. A lot of these bottlenecks have been reduced from the supply side as well. There were effects like coal sector got higher coal rake availability as well as the PPAs that have been signed. And the lack of PPAs actually had led to quite a bit of stress in the sector, and the stress was close to 40 gigawatt. Now, out of the 40 gigawatt, 21 gigawatt is on account of the PPAs are not being tied up, and the rest of it is the companies that have the PPAs. But on the flip side, the other problem is regarding the coal shortage. Now, the other chart should come up for you on the screen. Around 11 gigawatt is stressed. Around 11 gigawatt is stressed because they don't have the linkages yet. Now, throughout this year, we have been seeing a lot of high-power discussions, and committees have been formed to solve the stress, and a lot of policy initiatives have been taken. Though, yes, the result has been a bit slow and only 8 of them have been resolved as of now, but they're moving in the right direction, and that is the positive for the sector this year around.
Okay, well, those problems have gotten resolved, but all was not good for the sector, as Anisha has been pointing out. There were many negatives for the power sector. Anisha?
Oh, well, yes, while there have been some positives, remember that we are far away from the end of the distress in this particular sector. The sector is stuck in the perpetual cycle of lack of demand, shortage of coal and overdue payments, and operational misses by the discoms. Now, even after an uptick in coal dispatches from Coal India, due to the rake unavailability and the demand mismatch, a lot of the independent power producers as well as the public power plants face acute shortage of coal. For example, the coal inventory in the country at an aggregate level went as low as 7 days, and for a lot of power plants, the inventory was at critical levels. That means that was at a zero level. Now, after many years, NTPC, like many other IPPs, had to resort to importing coal. And you can see that the chart will come up on your screen. In August 2018, the coal imports jumped up 28%. And there's more. One of the weakest links for the sector is actually the power distribution companies. Now, while Uday reform was brought in to reform the discoms financially, it did not have the expected impact, as the All India AT&C losses in the first half of the year were at 22%, and this compares to a target of 15 to 19% that they had laid out. Now, the company level as well, the problem of overdue payments has not been dealt with. For almost all the companies, the outstanding dues have actually gone up on a year-on-year basis. The problem being even stark for some of these independent power producers versus the public sector banks. And as per experts, what has also impacted the power sector over long term is the lack of continuity in policy initiatives. Now, from sudden push to renewable energy to sudden changes in policies and tariffs, the sector faces uncertainty, thus leading to low business confidence. And very recently, we saw how it was a change in the power tariffs for the wind sector that led to disruption of the industry, plus surrender of a few PPAs. And this all has led to risk for the lenders, and the incremental lending to the sector has declined sharply. And while there have been some resolution, 8 out of 34 projects have been resolved, the process is long, and the applicability of the RBI's February 12th circular to the power companies is still being contested, and the road remains long. Now, going forward, the fortunes of the sector will depend on two critical issues. These are, first up, the shortage of coal needs to be met, and secondly, the high AT&C losses of DISCOMs has to be taken care of. Now, remember, the stress in the system needs to be weeded out, and it is the DISCOMs that really need to improve their operations by looping in the loopholes that we have seen in the administrative policy. So let's see how 2019 pans out. But as of now, we are moving in the right direction.
Okay, we are moving in the right direction, but as you said, the journey is long and arduous, and still many more things to be taken care of. Thanks, Anisha, for explaining that to us and summarizing it. Murtaza Arsiwala of Kotak Institutional Equities joins us now. Murtaza, if you heard my colleague speak about the two biggest challenges, one is shortage of coal and the other one is the huge DISCOM losses. Are we seeing a resolution to either of these challenges anytime soon?
Essentially, these are two large problems that we've been grappling with over the years, right? We're moving in the right direction, but probably a little too slow for seeing immediate results, and I don't think anything's changing very dramatically even now. You talked about coal supplies. I mean, the good part is that if one looks at YTD numbers, Coal India's growth has increased almost 6.5% YTD. So it's not a bad number per se compared to its historical performance. It's sort of matching up to the kind of coal generation growth that you're seeing. But the fact is that there are still plants which do have critical levels of inventory, and there is a shortage. Essentially, the way I see it is that the year gone by had fairly good sort of power demand growth. But essentially, at every juncture, if one part in the value chain tries to grow much faster, demand growth, for instance, this time round, the others, the supporting is not coming through, which is, where while Coal India did do well on its own accord, they weren't able to match to the entire requirement of supplies. What made things worse on the coal side this time down is also the fact that imported coal prices did shoot up a lot. And so the demand for domestic coal to that extent increased. So that's really what happened out there. Okay. On the distribution side, again, it's a large task. You have had some successes with it there, but not much short of what was expected. AT&C improvement is something that one cannot expect to happen dramatically. So really, the first leg of there, which was sort of reducing your outstanding loans and transferring that through bonds to the state government, that's something that happened with sort of something that you can have instant gratification. But as far as reduction in AT&C losses, that requires a lot more hard work. And probably a year is not good enough to sort of expect results, is what I'd say. Though, yes, still short of expectations.
Okay. Well, Murtaza, how would you approach listed stocks in that case? I mean, as you have been saying, and as Anisha pointed out, there has been a rise in power cost by actually at some months by 46%. And utilization went up by about 500 basis points for state GENCOs and about 200 basis points for centrally owned GENCOs. But for private power companies, they didn't increase at all. They've remained practically flat, about 55%. So how would you approach the private sector? Would you go in for a Tata Power, which is one of the few that has benefited from the rise in demand and rates?
So essentially, if you think of it, a few good things have happened, and something as close as last week. If you look at the year gone by, essentially, for Tata Power, you had, the window of opportunity opening up in terms of the compensatory tariffs. That's something that, is again, so from from a point where we were last year, where there seemed like there was no compensation and coal prices were rising, you've again opened the door in terms of, you're back on the negotiating table to see whether state governments are willing to accept the compensation, and that's where you are. As far as the regulated utilities go, which is, your NTPC power grid, you had a year of uncertainty in terms of how the regulations play out. As recent as last week, you've had the draft regulations come out with the regulated rate of returns remaining unchanged, and that was a much debated topic for most of last year, which kept these stocks sort of not doing much, essentially. But I think some of those uncertainties are going away, which is a positive. Valuations are fairly attractive across the sector, pretty much trading at no growth sort of multiples. Hopefully things turn for the better. That you were in a rising interest rate environment for most parts of last year also did not help the cause of utilities in general.
Murtaza, before we let you go, since you said valuations are attractive, which are the stocks that look most attractive to you now from a long-term investor standpoint, and what are the target prices there?
So we have a buy rating on Tata Power, on NTPC, on Power Grid. NTPC with a target price of 190, Power Grid with a target price of 250, and Tata Power with a target price of 90.
Okay. Well, thank you very much, Murtaza. Some of the gains, of course, came for Tata Power and I think even NTPC in recent days. So now pretty close to Murtaza's target.